video, but I do want to take the opportunity to provide an update to the Bitcoin trade I uploaded previously, and also talk, a little bit more broadly about patterns of self-similarity, different fractal price patterns, and also talk about correlated markets and the situation in the equities market where, different indices will lead other indices. But first, let me just dive into the Bitcoin charts and really start from the top. So I'll go to the quarterly chart, pull up the paper trading account. You can see I've still got this account open. Actually, you know what? Let's pull this off just for now. It's a little bit distracting as it is right now, just prior to getting everything on the chart. So you can see the quarterly came down to the prior all-time high, tested down there, rallied off there. It's a little bit of an obvious trade in hindsight, right? I mean, it's kind of a no-brainer, but I mean, if you're trading this market, that sentiment, it didn't feel that way, and it never does. A lot of the best, position trades always are extremely uncomfortable. And that's actually a pattern that plays out as the market, goes further and further up. But, so we come down to the prior all-time high, and then kind of base out around here. Now, one thing I really want to draw your attention to here is whenever you see a break of, a quarterly high after a major sell-off like this in Bitcoin's history, I mean, that's, it's generally going to be an area where the market bottoms. So, right here, you can mark off this high right there. You have a major sell-off down there. Let's pull this off. Major sell-off down here, come down here, and then take out the quarterly high, massive rally. Same thing up here, come down here, take out the high. Well, we haven't had a massive rally yet, but we do have that invalidation. Now, it is important to talk about instances where, this doesn't work or it doesn't work out. You actually had a quarterly high let's see, did it actually get taken out? No, it didn't. I actually thought this high right here got taken out by this, but it looks like it didn't, at least on Coinbase. So Coinbase, was true to this rule. I think on other exchanges it took it out a little bit, but I think what's important to remember here is this is, a black swan event, right? When the COVID world shut down, or COVID broke and everything went crazy and the world shut down and U.S. Treasury markets seized up. And, so anytime you get an event like that, even if it had taken out the high, you have to take into consideration that when you're back testing that, black swan events aren't going to be technical. But it is something that, broadly speaking, in the absence of a black swan event, is a really solid edge. But, it's important to keep in mind that it's only taking out the high after a major sell-off, right? Like here, obviously, after a parabolic run, you've got a different market dynamic. So it's important to understand the market dynamic and, how much is Bitcoin retraced, and applying that at the lows as opposed to the highs. So that's the read on the quarterly chart. Let's go down to the monthly. All right, so you can see these same levels here. I'll pull this off the chart right there. We've got our all-time high. Now, this is really the area where, structure really started breaking. So I'm going to pull this over, make it even tighter. And this is really the break of structure, right? You've got your highs set before FTX collapsed, and you got your final capitulation leg down. Really, what would be a macro stop run. So, I mean, really, your capitulation really is right here. And that's where all the volume came in this candle right here, down to 17,567 on Coinbase, basically running into the all-time highs, not the bodies, but the wicks. So you get your capitulation down into the wicks. And this can be seen as, a bit of a stop run on the macro. Now, I know it didn't feel like a stop run at the time, but you got to remember the macro chart is, it takes time to play out. So really, but what's really important here is the break of structure. And this was what I traded actively. I actually opened a position, my paper trading position, prior to that, but I've actually been participating in a trading competition on a separate account where I took that trade. But let me just pull up the paper trading account right here. So I've still got this position open from down here. And, you can see essentially what you see here, test down in the all-time high, run up above these highs. So prior to this, you have a series of lower highs on the weekly, lower high, lower high, lower high. Then you get this break of structure, run up above, run into the bodies of these candles right here. Not quite exactly, but gets front run a little bit. And then it tests back down into this level right there and rallies off. So you get a consolidation, break of structure, up above these highs, running back into the highs, and then running. And you can actually see, and this is kind of where it ties into the pattern of self-similarity. So we've got those, this is the FTX high that I marked off previously. Price broke above it on a weekly and monthly chart, consolidated a little bit up above here, and then ran down and rallied off it. But now you've got the same type of pattern playing out on the 4-hour. So it came down to that weekly level down here and then rallied above these highs right here, running liquidity over here. We'll get to that soon, but it ran above these highs and came down and tested into these highs right here and then rallied back up towards the range highs. Now, what is the level that ultimately price came to up here? We'll mark that off. The high right there on this candle is, let's see, 25,256. Let's go to the weekly chart and put one right here. So that was 25,256 as a high, and this high you can see is 25,214 on Coinbase. So essentially what happens is price breaks above right here, rallies back into these highs right there, and then runs for these highs up here, running just $40 above these old highs. This is very, very classic bullish behavior. If you think about on a fundamental level, what is bullish behavior? Essentially, it's when the market is looking for liquidity to the upside, right? It's no longer looking for liquidity to the downside. It's now breaching highs, creating higher highs, and even if it's not necessarily, you can have a combination of creating higher highs and then reaching higher for liquidity, selling off a little bit. So these are very tradable levels, right? It ran up $40 above these highs right here, and then sold off, pretty dramatically, with this 4-hour candle, which, I noticed on Twitter that 4-hour candle made a lot of people bearish, just one 4-hour candle. Price hit resistance and sold off, but the pattern of behavior, since January is pretty obviously bullish, right? I mean, you have to go pretty far back in historical price action to create a bearish bias, right? If you focus on what's happening now, currently, the market is reaching for liquidity to the upside. It's a very, very clear trend. That it just kind of ties into the idea that, if you're looking at price action from 12 months ago, right? Like to generate a bias, right? I mean, that's price that has not only already occurred, but it happened 12 months ago. So if you want to be on the cutting edge, you want to focus on what's happening right now, as opposed to being overly hyper-focused on historical price action. It doesn't mean that historical price action isn't relevant. It clearly is relevant. I mean, you got a reaction right here off this historical price action from August. So they're very relevant, but it's a nuanced thing where it's like it doesn't, price reacts from those levels, but it doesn't change the fact that the market has changed its behavior here and is moving up. And until we see it change its behavior and reverse what we've seen from January, you've just got to treat this as a bull move, right? And rather than trying to predict when it will end, just let the market show you when it will end. And that's something that's pretty easy to do from a technical perspective. Now you've got different time frames. For example, if you took out this low here, then you would have a lower low on the 4 hour and a lower high, assuming it went down from right here. But you wouldn't have it on the daily, right? I mean, on the daily, you would have to breach these levels. And of course, if you breach those levels, you would also have a downtrend on the 4 hour almost inherently. And the weekly doesn't even have higher lows yet, so it doesn't really even have a confirmed trend. But I would really, we got this very, very dramatic move down from from 21,500 all the way up here. I mean, this is a big move. It's bigger than even what happened here. I would be looking at this level right here to invalidate. And by that token, I would be looking at that swing. You can go down on a lower time frame and look at the hourly swing. For me, any retest down into this level is a massive buying opportunity. Just because this is, whoops, I accidentally clicked on that ad. Just because this is a great invalidation, or this is the invalidation I would be using personally. Yeah, I mean, and the way the risk reward profile goes is, the closer you get to your invalidation, the more favorable the risk reward on that particular trading idea is. So that's something, I'm really looking towards. Of course, I do have this very, very favorable trade from down here on Bitcoin, 1,039 Bitcoin position, roughly 7 million in profit right now. So it's kind of nice when your invalidation for your trade idea is way higher than your current, than the current price. But I'll just put an order into the market right now. We can do 21,400 stop. And, I'm not going to put, the entire, let's see, whoops. Got 21,433, 430. So I'm just going to put that stop in the market just because, I don't want to take all of the position off here in case price comes down, does a stop run, runs up, and gives me a better opportunity to, get rid of the position. But the idea is that, once you hit a major stop like that, it just makes it very psychologically easier to take the loss. If you've already taken a significant portion off the position, it just shifts you into that frame of mind of taking losses because you've already taken a loss, even though there may be other ways to get out of the position at a more favorable way based on closures, other things happening in the market. So now with that said, I know we already kind of got a reaction off this level right here, but we are close to that resistance. And if you've watched any of my previous videos, you know that this is really the last line in the sand until $36,000, right? I mean, yeah, we tested this level, we reacted off it, but if we close above here, price could really get crazy really quickly. But despite that, we are still operating at resistance, and just to pay respect to that, I'm going to take a little bit off this position. Let's see. Well, actually, I'm not going to. Let's see. What am I going to do here? Actually, I'll just open a hedge against it. So I'll do 69 just for the memes. And so now I've got it took it directly off this position here. So I was able to take 69 Bitcoin off of that position. And, obviously relative to the size of the position, 69 Bitcoin is, not that big. This is still a 970 Bitcoin position. Because I want the position on in case price does run up and do a little bit of a gap fill up into this area. Now, with that said, just as putting a stop loss order here, kind of puts you into the mindset of, taking losses. Taking profit here also puts you in the mindset of taking profit. So if we don't get run up in a parabolic run, then I will also, continue to take profit more aggressively. If price kind of stalls out here and then starts to bleed down, that's really not what you want to see. What you want to see is either a continuation up abruptly or some type of vertical accumulation pattern, where you're sort of grinding out at resistance. Like if you were to take out this high and then just kind of push up slowly, that would also be a good sign as well. But if we just kind of stall out here and start bleeding lower, then I would be looking to take profit a little bit more dynamically. And that means that, if we break lower, then I would be playing bearish retracements. But, this actually right here is a bearish retracement in itself. You can see, again, not perfect, but you can see it on the hourly chart. Price runs down to this level here, which is this high previously right there, runs down and runs up into a 618, a little bit past it, actually into this apex up here. Very, very nice price action, actually. Runs back down into these bodies right there, and now we're just kind of consolidating. Now, the longer price spends consolidating right here, the more likely it, the more time it spends consolidating in this type of fashion, the more expansive the move will be. Now, considering what's going on in the weekly time frame and what we saw on the daily expansion, I don't really think that a period of consolidation is necessarily the most likely thing. I think, broadly speaking, again, you got to stick with me on the hypothetical that price does run higher and fill this gap. If that were to happen, then, in hindsight, people would look at the period here, which is roughly the period that could be described as consolidation below the 200 exponential moving average, the 200 simple moving average on the weekly chart. So, just with that in mind, that's kind of how I'm looking at Bitcoin right now. So let's move on to equities. One thing I want to talk about is the one thing I had mentioned previously was the Dow Jones Industrial Average has led the market. It created higher highs back in November of 2022. NASDAQ and SPY actually just recently created new higher highs, taking out these highs right here. If we go to SPY actually just created higher highs as of 2 weeks ago. So kind of the carryover from that is that, I was looking at this and I was thinking, well, okay, if is the Dow Jones Industrial Index leading, right? Well, at that point in November, we didn't necessarily know that that SPY or NASDAQ would follow up on the Dow Jones and take out its highs. But now, we have that confirmation, and I think we can say, with pretty objective certainty that, the Dow Jones Industrial Average did lead the other equity indexes. And, since that's true now, and since that has been confirmed, then I'm sort of inclined to look at the Dow Jones as a leading indice as far as the U.S. equities markets go. Now, who knows to what extent that will be true, but that's just kind of my perspective, the way I'm looking at it. So if we keep that in mind, the Dow Jones currently right now is consolidating on a weekly time frame. Right, you've got your higher high here, your higher low here, and it's just kind of moving into this wedge. So, ultimately, again, kind of tying back into what I was talking about on Bitcoin before, if the longer time spends in a consolidation, the more aggressive and expansive the expansion of volatility will be following the expansion. So, with that in mind, we can kind of make the extrapolation that, or at least the way I would be looking at it, is whatever way this consolidation breaks in Dow Jones is probably going to be important for SPY and NASDAQ, because we have established that it's a leader. So again, we don't necessarily know which way it will break. I think, there's probably a greater likelihood for it to break upward because we've just seen a break of structure. Equities have broken structure. They probably are more likely to run a little bit than they are to sell off immediately after breaking structure. But again, I don't really like to put myself in a position where I'm predicting what the market will do necessarily as it relates to other correlated markets. I'd prefer to just wait for the leading market to show me what it's going to do, and then use that carryover to trade the correlated markets that are being led. And kind of the way, where that ties into Bitcoin and Ethereum is, the crypto market broadly has generally been led by Bitcoin exclusively until recently. And kind of in around 2020, 2021, we kind of saw situations where Ethereum was leading the market. So Ethereum has established itself as a leader in the crypto space. And, sometimes Bitcoin leads the market, sometimes Ethereum leads. But it is important to kind of keep tabs on that because if Ethereum's leading, then you're probably going to see FBTC rise, which is very tradable. And you're also going to see BTC, whoever isn't leading rise with a lagging effect. That's also very tradable, can give you a bias for